It's now time to shift gears to tax resolutions. This is a presentation of accurate records and tax services where the chief CPA is Mr. Adil Baloch. On this set, the host is attorney Ramesh Khurana from the Khurana Law Firm located in Gaithersburg, Maryland. Today, attorney Khurana questions CPA Baloch on corporate tax resolutions. Let's join these two gentlemen.
Welcome to the Capital Forum. Mr. Baloch, welcome to our studios.
Thank you.
I have a great privilege to welcome Mr. Adil Baloch, who is a CPA, and he's having his office in Montgomery Village, Gaithersburg, Maryland, but his practice is in several states because he can work while sitting in Maryland. And I asked him this question as part of the introductory session, and he explained because of the time difference between different states, and also because he has some clients overseas as well. So he and his team have to work extra hours to cope with the additional work. That's good to know. And now in last session, Adil, I asked you questions about the individual taxpayers' resolutions, like individuals face problems when they live beyond their means or they have incurred certain losses. So likewise, I am going to ask you about the corporate issues. Like there are certain companies who spend beyond their means or they suffer some losses. It happens. This is part of the business operation. Sometimes things are beyond your control and they owe some money to IRS. So how that corporate body can think about resolving the issue of paying money to the IRS?
It's a good question, actually, when it comes to businesses. As an individual, obviously, you have the options, as we talked about last time. Corporation, a standalone entity by itself, how is it going to take care of everything, and who made the decision and how they got to that point and all. You deal with the corporation as if it's another being, it's another entity.
We always say artificial person.
Correct, that's right. It's an artificial person.
Right.
Have the exact same venues available.
I always tell people, like whenever you get a certificate of incorporation or certificate of organization in case of LLC, this is the birth certificate of the company.
There you go.
Like you have a birth certificate issued by the municipal council.
That's a very good way to look at it, exactly.
Yeah.
So yeah, you're right. So it's basically another person. And just by virtue of that, obviously, this person has pretty much the same options as the other person as an individual. It's just that now the corporation is responsible, the corporation is liable. A corporation can still go through the same motions as an individual. You have the offer and compromise venue available to yourself. You have the partial pay installment agreement. You can pay, but you cannot pay the whole thing, whatever you can afford to pay, because there's a statute. You can only pay, or the IRS can only collect up to a certain amount of time. The law only provides for you to pay, or for the IRS to collect. There's a statute end date for collections. So when the day starts, you start paying. You can only go up to a certain point, and whatever you pay up until that point, your debt is done after that. So it could be a partial pay installment agreement. It could be a full pay installment agreement. It all depends on what you're capable of paying, what you can afford to pay without getting into any economic hardships.
Great. Now let me ask you another question. Now, as we discussed that corporation is an artificial person and corporate has its own entity and corporate is responsible for its own actions. Now, can there be a situation whereby if the money is owed by the corporation to the IRS, that can become the liability of the owners of the corporation?
Unfortunately, the answer to that question is yes. Especially,
it's scary for many people here.
Absolutely.
Yeah.
And people who are in business of what we do, the tax resolution business, we see these examples, and we see some people in real distress just because they did not know the law. So for a corporate debt, especially the trust fund, which is the withholdings that you have kept from people's money, the federal withholding, the Social Security, the Medicare, all that money obviously belongs to people, not to you. For whatever reason you were not able to pay that money, or the corporation was not able to pay that money, now that money is due, you have to pay. And if the corporation is not capable of paying or it's not in a position to pay, it's very easy. The law is black and white. Tax is a code. It's law. It's
Right.
black and white. There's no opinion. There's no gray areas. Everything is written. IRS will follow some very simple steps. They will ask the owner some very simple questions. Who was responsible? Who made the decisions? Who decided not to pay this and pay that? Who decided, even to the extent of asking who decided to pay the rent and not the taxes? Once they narrow that down to who that person was, whose responsibility
You mean
it was.
decision maker?
Decision maker, exactly.
Oh,
now
really?
here's the interesting part. The decision maker does not necessarily have to be one person. It could be multiple people. Whoever was responsible, they all became equally liable for that debt.
So that means if any decision is made by the board resolution of a company, let us say there are 10 owners and they have a board meeting, they make certain decision, minutes are recorded in the minutes book. So that means all the 10 people who deliberated that kind of meeting, so they are going to be responsible for the taxes owed.
Just so it comes as a good advice to everyone, I would just to be on the on the side of caution. The answer, the simple and straightforward answer would be yes. But then again, there's a board meeting. There's certain decisions made, but then one of the decision could be that every decision will be made by such and such person. Now it becomes this person's responsibility to cover everything the way it is supposed to be done. In which case, it might not be necessary that the other 9 people are responsible.
Oh, so in case of an LLP, like a person who is a managing partner,
Correct.
like,
That's a very good example.
as
Correct.
opposed to limited partners.
exactly.
So managing partner is going to be personally liable.
Correct. So as you probably know, there's appearance and there's fact. Appearance might be different than what the fact is, and that's exactly what we're talking about. It's common sense.
Right.
I was supposed to make a payment to the IRS. I decided not to make that payment to the IRS. I decided to put that money towards my marketing budget because I was hoping to make more money so I can pay the IRS eventually. Things did not work out, now I'm in trouble. That would be an example. So
Right.
your business decisions, when you make those decisions, you have to be very careful.
Now, Adil, we did talk about levies and liens and garnishments in respect of individuals. All these kinds of terms can be used in case of corporate clients as well?
Let's say there's one thing that cannot happen in the corporate environment would be the garnishment. But obviously, liens is a fair deal. Businesses have liens filed against them all the time because businesses own assets and their assets are frozen in a way when a lien is filed. And obviously, levies, and as a matter of fact, a corporate levy could be much more disastrous than an individual levy because now, what if you have payroll to cover 2 days from now and the IRS comes into your account today and all the money is gone and you don't know how you're going to cover payroll for 45 employees 2 days from now. So a corporate levy is much more scary. And as we discussed last time when we talked about the individual tax resolution, all these problems can easily be avoided. All you need to do is just deal with it, communicate, deal with it.
Right.
Do not let it go because certain intervals call for certain things
Right.
by law. And once you get to that point, the lien comes in, the levy comes in, and you have all sorts of these problems. It just complicates things.
Wonderful. Now, Adil, let's talk about the concepts of employees as opposed to independent contractors. Of course, all the employers love to classify their workers as independent contractors because they do not have to match certain tax obligations. So, is there any criteria or rules set by IRS? I know it's a very large topic, probably it cannot be covered in next 5 to 10 minutes, but just give us the gist. Because many of our people who are listening to the program, they are small businesses, so that they can have the benefit.
Yeah, let me just give you the gist of it. First of all, classifying somebody as a contractor versus an employee is not a matter of your choice or it's not your opinion. It's very clearly defined. There's about 52 different conditions that you have to meet before you can classify somebody as a contractor. So you really have to understand that law. And let me tell you one thing, while you're an attorney, I don't have to tell you, I can tell the viewers about it. Any kind of defense, if you walk in and you say, I did not know, it is never a good defense. You have to understand the law. Being an employer, it's your responsibility. You have to make sure that if it's supposed to be an employee, it has to be an employee. If it's a contractor, it's your good luck. You don't have to pay taxes or anything like that, but you have to make sure that that person qualifies under every single item that has provided by the IRS, which I said about 52 different conditions that you have to meet before you can actually pick somebody as a contractor as opposed to an employee. So no, it is not your opinion. It is not something that is a matter of choice. It is the law. You have to understand it, and then you decide whether this person is going to be a contractor or an employee.
Now, let us say there is a situation where the employer should have classified that particular person as an employee, but that business has been classifying as an independent contractor. Now, after 3 years, the accounts are audited and IRS makes a determination that this was a wrong classification. So, what are the penalties which may be imposed against such businesses?
So there was a pretty famous case in New York. I think it was, I have to say, it was probably 2008, maybe 2007. It was a home healthcare agency. It's common practice in home healthcare agencies to have their RNs and the nurses and physical therapists to be classified as contractors. For this company, the way they had set it up, they actually by definition did not qualify to be contractors. Every single one of them was actually reclassified by the IRS as employee, and you can just imagine the amount of payroll multiplied by 7.65%, and then the penalties are twice the amount of that. You can just imagine what happened to that business. That
so
business
the
does
actual
not
amount owed plus 2 times penalties.
Penalty.
So these are the minimum.
Minimum. That's the minimum. Then you have not paid it for 3 years. We know the interest. We know the penalties. There's accuracy-related penalties. There's penalties for not payment. There's penalties. There's interest because you had access to the money during that time. That's how IRS defines it. My money was with you, so you made interest on that. Now you got to pay that interest back to me. All of that comes into play. They reclassify themselves and they send you a bill and say, okay, you owed us this money. Now you got to pay us.
What's the resolution when a business is facing this kind of problem?
Again, as we talked last time or earlier today, when it comes to any kind of trust funds, there probably is not. If there was a resolution to something like this, the company that I just mentioned would probably still exist today. That company just could not find a way to get out of it and eventually went out of business.
Right. So, if we come to a trust fund, of course, then the standard is higher. But if it is a non-trust funds, like in case of wrong classification, because nothing was withheld. So, in that situation, what's the resolution you would offer?
In that case, you probably, again, you have to prove willfulness against, an innocent mistake.
So it was
those
not
things,
knowing.
Correct. So
Right.
those things could come into play. You can actually fight that. Fact of the matter is, at the end of the day, the Social Security and Medicare is owed by the employer. So there's very little that you can do at that point. Okay. You might be able to get rid of some of that, but for the most part, you have to pay it.
Let me ask you another question. I think probably this is the last question of this session. We are running out of time. Are there any criminal penalties or consequences when you misclassify a person as a contractor as opposed to an employee?
Most of these penalties are civil. There's hardly ever a chance where there's going to be a criminal case, but it depends on what your intentions were, what you were trying to do. Again, this being part of the law, it is quite possible, because your intentions, that's what it comes down to.
So, if it is in good faith, probably you can live
Usually.
with civil penalties.
Correct.
Great.
Correct.
Thank you very much, Adil.
welcome.
I appreciate you coming to our studio. I enjoyed this session with you.
Thank you very
and
much.
asking you some of the difficult questions. But maybe these are easier for you. You resolve these kinds of issues all the times for your corporate clients.
Thank you
We
very much.
appreciate that. And again, last word, if you have any tax issues, talk to your competent CPA. I am pretty sure you can have a sound sleep. Thank you so much. Appreciate it.